All right, let's take a look at the market here. It's kind of interesting if we take a look at just indicators. First and foremost, we have blue above gold right here. I'm looking at the S&P 500. You'll notice the pivot resistance is 420. So we should get a rally at 420. Maybe we go a little bit higher. Volume last week, it's starting to weaken a bit. The advanced decline did make higher highs and higher lows. So it suggests that any strength up there without big volume. That might be the blow off top, but we hit that 420 number and you fill the gap. What I've been saying for, I don't know, a while now, there's a gap and it exists in the market right here from last August. And if we can fill that gap, we have unfinished business, top end of a trading range. And more likely, based on weak volume and overbought stochastics, we could see a pullback. So I mean, is it unlikely to go? I mean, if we go from 412 to 420 sometime last week, it's a 2% rally. And that's why in the newsletter, I said maybe we got 1 to 2% to the upside before we uh, convert to a maybe to make the Bears feel like they're worthy of all their prognostications over the last month and a half or quarter, actually. We do have something happened here in the McClellan oscillator on a weekly basis, and we just closed or crossed below the zero line. I'm not a big fan of that when the market rallied. So, if we get another week of decline and the market rallies, that would suggest a massive bearish divergence, and we should be on guard and look to maybe be aware that I'm not a rip roaring bull, but I haven't been bearish down here and prognosticating the end of the world. But I would say if we get to the top end of this trading range here and the indicators are still negative, we have to be more realistic and expect, the market's going to come back down possibly and stay in this kind of trading range. That would be the downside area of the range. And again, this would be the upside top part of the trading range. Seasonally speaking, we generally get a rise going until about mid-June. Not selling may go away, but sometimes it's no one said it's the 1st of May, and I'm not sure exactly how we're going to play this year out. But the daily reading is certainly seeing a new high with lower readings, and that's a bearish divergence now. So I will highlight that so that you can see that the McClellan oscillator is pointing lower as the price has gone higher. So any further upside might get us into more relative weakness. Even the advanced decline line is not generating, a positive. It's not generating a negative reading, but it's neutral. Let's leave it at that. Looking at the Dow broke out. Dow has good seasonal trend. The Russell had good volume and it didn't move anywhere with the advanced decline. So looking at typical indicators, this is again, it's not acting. The different cap weighted sectors are not corresponding, and it's you got energy going up, you got uh, Apple not going down. We don't have much participation out of Google yet. We do have Meta, Facebook going up. So this is not a technology sector. We're firing on all cylinders. Last week we got stopped out of Taiwan Semiconductor because most of the semis moved sharply lower. Some of the financials did very well because of JP Morgan and the bank earnings, and then Citi made money. But then again, airlines all got crushed. And so there isn't one sector that you can say is just going gangbusters, except for maybe some healthcare medical devices segment like a Stryker and Isrig, which has earnings this week, has been doing a little bit better. Perkin Elmer is PKI, and I'm going to get to that, is one that we try to buy at lower levels, and it just saw some upside. Now it's a diagnostic PKI. It's a diagnostic service company. It definitely came off the highs, and yet it has strong seasonality, great volume. So it looks like one of the competitors, you're probably familiar with the name. It's called Thermal Fisher. And to be honest with you, I like them both, but I like Perk and Elmer a little bit better. So I'm going with, again, raising Perk and Elmer to a better price structure. PKI I'm thinking, we had great volume there. Is the newsletter is looking for like 133, just above the gold line, which is 133.31. So, we had a doji on Friday, but a weekly buy, and we're still looking at stronger numbers. Even the weekly pivot support's good. So, seasonality is super strong. So this is the time of year I think if we get lucky on a pullback, have your orders down there at 133.35. What's with Tyson? Tyson chicken. That's the best I can come up with. Well, no, not really. It's had a pretty good um, move over the last few years since 2011. I don't know if people are eating more chicken because, well, steak's pretty damn expensive. And I went on a rant about the price of a leg of lamb at Easter. Oh my goodness! But look at the seasonality there for Tyson. So earnings is a few weeks away, so we've got that. But huge volume on a daily chart. Can't ignore that. And the weekly pivot looks structurally completely bullish. And so if we get maybe a little bit of a, I'm not looking for a huge pullback. I'm just going to buy against weekly support there around just a little bit above weekly support at the 3 week pivot support, 59.75. We're trying to buy it at 59.78. Estee Lauder, I'm thinking this is the time it has a great seasonality, which is weird. Good volume on a weekly basis, not oversold. Excuse me, overbought. It's oversold on a monthly basis, even. Hopefully, we can get some of this action. I'm thinking, yeah, maybe people are going out and ladies are, using, I guess between Clinique and all the other makeups that they sell, perhaps this is the time where you get, people get dressed up. It's that also that time of year, and you got junior, senior proms, and so I'm not saying that's really the catalyst, but it could be the reason with graduations coming up that now it's time to study less and get dressed up and go. So out in the real world for kids, and I'm not certain if that's the real reason, but it certainly makes sense, right? So SD Lauder's on our watch list or entry levels to buy. Oxy, OXY, we're still trying to buy Occidental on a pullback. We're in half. I had a whole lot of buy signals this week. By the way, not a lot of sell signals for low closed dojis. In the high closed doji category, we did have a few names, and I mean, MasterCard was not quite a high closed doji; you just closed a bit greater than a, so I'm not considering that. Capital One, Aflac, Apache, and in the energy space, I mean, a lot of energy all looks very similar. So I'm going to stick with the Oxy. If I had to, now I wasn't a big fan of buying Devon at 74. I'm probably more prone to buy it in the 50s, but it had a gap up, and every chart looks very similar to this. So, meaning it dropped down and came back. It's got a lot of volatility. OXY dropped down, pulled back. If I have to go in one, it will probably, be honest with you, is going to be Shell again. And it did the same thing, dropped and pulled back. I mean, every single trade has this huge kind of shake and bake right out of the marketplace. So I think I have to hope for a shakeout, fill that gap, but it exists in this pattern where you left a gap here and a gap there. It's not quite an island bottom, but it has that impressive look to it. The problem that I have with the energy is if energy continues to go up, that means demand's outstripping the supply because OPEC announced a production cut. Let's see if they do that. There's always been their cheaters, and maybe United States will see if we can ramp up, which is why I'm still trying to look at buying Occidental. In the meantime, if we're listening to all this headline news where the Federal Reserve's own study group came out and said we expect a recession, meanwhile, Janet Yellen, the Secretary of Treasury, who used to be on the Federal Reserve, saying she's not even looking close to seeing a recession this year. So who do you believe, right? So we've got really a polarized environment between those who believe that there's financial Armageddon coming and those who believe that it's still a very tricky market environment and a stock pickers market, and that's where I stand at the stock pickers market. I just think that if energy stays here, demand remains stable, we're still going to be using gasoline, diesel fuel, and I still think that people have money and they're still working. They're still going to want to enjoy life and do things in life. Are they going to go to extremes and spend money in lavishly? I don't think so. I think it's going to be things to do, places to go, people to see, events, and there will be some traveling this summer. And for that, I think that there's still these big events that occur. There's the Derby, big events, right? I don't mean little events. There's big events coming up in the next few weeks. Now, do people drive to the Derby? Possibly, but a lot of them fly private jets. Is the next one is going to be the Indy 500? That generally attracts a few 100,000 people. Are they going to be driving? Either way you look at it, they're going to be consuming fuel to get where they're going. And the latter, the Indy 500, well, that's a bunch of cars consuming fuel anyway. So I think people will travel to these events, especially regional. And one I like, and I'm got to watch this a little bit better, but it is Southwest Airlines. And I know they got a really bad rap at Christmas time, but the stochastics is way oversold. It's got a bullish hook pattern. And seasonally speaking, it lingers for a little while. And so we got time on this for another week or two. And then you start to see a seasonal upturn again. So I think that seasonal upturn is that maybe that's that short term. Do grandparents go to fly to grandkids' college and high school graduations? Possibly. So, I mean, there is some traveling and other than the spring break. And I think the discounters will do a little bit better. If fuel prices keep going up, yes, this is not going to be good for the airline industry. Delta Airlines came out last week with earnings, and it wasn't that bad. What they claimed is that it was due to poor weather, but they've got stronger bookings and summer bookings, and people are traveling. And then you look at, like, for example, where would they travel? Well, a cruise. Well, if you're taking a cruise, you're not going from, like, say, Minneapolis to Fort Lauderdale or Miami where the cruise ships leave. You're going to probably fly there, right? So again, or are you going Airbnb? Airbnb had a kind of a good recovery week. It's not really going very far, very fast, but technically it looks okay. It's just not in a weekly buy. Technically being the volume. I think maybe we'll get a little bit more updates from them when they announce earnings on May 1st. So, bottom line, if we are seeing the vacation spots in the service sector industry doing better, hospitality, for example, how are people getting there? They have to fly. And so perhaps we're getting closer to maybe a reversal at these lower levels in the airline segments. An interesting thing came out a week ago, which I put in the trading room a week and a half ago, or maybe, excuse me, March 31st. It was a Friday. There was I guess, wasn't quite publicized, but we pushed the link out into the live trading room where the FAA met with some of the major airlines and said, "Guys, got to cut your routes down because we don't have the pilots and we don't have the air traffic controllers to maintain an increase in traffic flow of airline flights." So that might explain why bookings are so expensive right now and flights are booked solid. So they cut back on some of the routes, and again they're asking for more money. And with unless people cancel the flights, and I can't see why would someone cancel a flight if they're already planning to go to Italy, go to Europe for the summer or some trip like that, we're still going to see travel. And so energy is going to be a part of that. And I think rather than looking at high end ticket items, we're looking at destinations still. And that's just my theme. And that's why I think that we got to keep our eye on that. And if you're staying at home, maybe people are going to be barbecuing chicken. And that's why we're going to probably look at Tyson this time and try to get into that. As far as everything else, we saw gold still doing well. We've got Snowflake software application holding in there. Amazon is holding in there. Occidental, we already mentioned, and then Alphabet held in pretty nicely last week. AMZN, we were able to get that push to the downside, almost got stopped out, and it just, man, dumped and pumped. So big volume, better seasonal trend, and Amazon looks a little wholesome here. And if we take a look at Google, GOOG, kind of same thing. Got clipped on the long entry on Alphabet 105.12 on the pullback there, and then just exploded to the upside. Decent volume, seasonal. I don't know. It's choppy, but we should start to see some upside. And I'm thinking 112, 114, somewhere up into this vicinity here. A lot of old pivot structures there, and old resistance. That again is that August level where there's a gap on the S&Ps. That's the same level, and that line in the sand is, I mean, a little bit higher than the 114. That's like 117. So there is some, some upside potential there, and I think that we'll just hopefully take a ride for that in the next week. So other than that, gang, it's Fed speakers, lots of earnings. Tesla's coming out, IBM's coming out, Lam Research coming out this week. So Wednesday after the bell will be big. Discover Financials again, a few banks. We got, I besides earnings, we got more Fed speakers, another Fed book data dependent thing to watch. This time, instead of the minutes of the FOMC, it's the Beige Book report. Oh, we got to watch the Beige Book. And so the Beige Book is basically a reporting of the 12 Federal Reserve districts in the country, and that reports their assessment of economic conditions, bank loans, structures, things like of that nature, consumer demand for loans, and healthiness of loans, people paying them back, or their delinquencies, et cetera, et cetera. So all that goes in the Beige Book. And supposedly this is what the Federal Reserve looks at before they make a decision on interest rates. Okay, well, every day is something new with this Federal Reserve. And all we know is we got a bunch of Fed speakers coming out as well. And they're more likely going to say inflation's more sticky, inflation's sticky. And they're probably going to pump the book up for another quarter point at the May meeting. After that, I personally don't know what a quarter point does monetarily wise, but psychologically, it maybe gives them an argument that they're doing their job of reducing inflation that, well, no offense, they helped to create. So, but it was transitory, and I know we joke about that all the time. So here we have a market that with higher interest rates and an environment and an economy that still seems to thrive with that higher rate, and it hasn't stopped consumer spending, mortgages, building, housing. And by the way, if you take a look at this, this is what I was referencing in the trading room the other day is, you know, we're seeing housing. This is Toll Brothers and it looks very strong. DH Horton, by the way, still looks pretty strong. Pulte Home Group still looks astronomically strong. And so, why aren't we seeing SHW, Sherwin Williams? Why aren't we looking at Leggett and Platt, a furniture maker, Sherwin Williams, a paint company again? HB Fuller is another paint company. I mean, excuse me, FUL, Fuller. HB Fuller, there it is. Yeah, it's up there, but it's not as strong as what housing is. Another is FBIN, and that's one we were talking about in the room. And this is Fortune Brands, who owns Moen Plumbing Supply and other things that go into a house. So if you're building a house, shouldn't this be going up? Because I mean, you can't sell a house if it's new construction without like a kitchen sink, a bathroom, faucets, and things of that nature. So either they're buying direct from the factory, but then these companies like Moen should still do better, or are they using Delta, or are they using lower end, or are they? Do they have their own inventory? I don't have that answer, but I do know that when builders are building and they're making money and their stock goes up, it's because somebody's moving into a house, and that is good for the economy. And the housing has always been good for the economy, and peripheral markets should do better. But we're not seeing that in the furniture makers like a Wayfair and ETSY, and maybe we got to wait for earnings. But there's Etsy. The intriguing aspect is, and I know it's not been around a very long time, so we can't really examine the seasonality because of the pandemic. But supposedly Wayfair does pretty well. Here's a furniture company that we got, Leggett and Platt, and Leggett and Platt's been around a long time. Their seasonality looks pretty strong as well. It did jump in a weekly buy. So the question is, do you buy a house and buy furniture? Do you buy the house and is the housing um, industry done for a while? And that's what now the next cycle would be, instead of building and going into finishing a house with painting. Um, is it now those houses get closed on, people move in, and then furnish them? That's one of the things we have to kind of watch for, and I'll be looking for over the next couple weeks. And I think we all should be watchful of that. I'm not a big fan of Leggett or Platt as a trading instrument, by the way, but it is something that we would want to keep an eye on. Lastly, if we take a look at the EWQ, which is the French foreign market ETF, and you notice that France is near its like literally all-time highs. EWI, Italy, by the way, is not at its all-time high, but it's getting damn close to its highs post-pandemic and pre-pandemic, right? And then EWG, which is Germany, I think I said EWG, Germany. It's recovering, but not like France. And then you have EWU, which is the UK, which would be representative of the FTSE 100 type of thing. You're starting to see these foreign markets doing a whole hell of a lot better than the U.S. market. And it used to be rising tides floats all boats. And it seems that the UK is doing good, the French is doing good. French President Macron was over, hobnobbing with President Xi in China. Brazilian, we could take a look at EWZ. That's the Brazilian ETF. They're not doing great, but they're, all I can say is they're not doing bad technically. And their president flew over to see Xi, and then we had again our Treasury Secretary supposedly over there also. So instead of China coming to the United States, the world is going over to China, and I find that kind of weird. But be that as it may, I think we should see at least some more upside out of this market before the bears, are, are I guess you want to say are right. At this point, we've got everyone coming out prognosticating that the end of the world is coming from a financial Armageddon because of inflation and tighter interest rates. And the funny part is you got some of these foreign ETF markets and foreign stock markets at near all-time highs or approaching them. And it's just, if inflation is a problem on a global, it's not just domestically, it's globally, and people are getting by. So we need to. There's a thing about looking at economics, and when people are at work, they provide and they increase production. And that was part of why we had supply disruptions, because factories were closed because of the pandemic. If you open those factories up and they put out production and you're increasing productivity, you have cheaper goods in masses, and therefore you should start to see a decline in some inflationary pressures. But I'm just pointing out to you that um, we're not seeing this from a global scale because all central bankers are raising rates except for Australia, which took a pause. And I want to make mention this week in the European Central Bank, or the Euro zone is coming out with their consumer price index this week. So Wednesday morning at 5 a.m., we'll see if maybe inflation's coming down, because if it can come down there, remember we had Christine Lagarde from the European Central Bank. They raised rates over there a half point. So if the Euro CPI comes in unchanged or slightly lower, that would be a kind of a boost in the arm. Some people think it's going to be hotter, and that means that the European Central Bank will have to raise rates at least a quarter or another half point again at their next meeting soon. So it's hard to prognosticate everything, but we are seeing, what can happen. The market wants to figure out what's going to happen a year from now. The market said we're going to be in a recession by now or not. And bottom line is we thought that the regional banks were, because of held to maturity debt instrument risks, was going to cause more of a financial crisis, and it's not there. So again, we keep dodging bullet after bullet after bullet, and here is the market kind of trying to break down, but yet it keeps going higher. And look at the stochastics reading on a monthly basis. It ain't overbought. It's kind of a weird scenario there. So I'm still hopeful that we've got a little more upside before we get into maybe the selling may go away, and the number 420, it keeps showing up on the screens, and there's that gap. So if we get a clue, or at least take a cue from the foreign markets, the CAC 40, and again, looking at the FTSE 100, and we can see some of those markets make new highs. Perhaps, I'm not saying the S&Ps can make a new high, but at least give us a goose to the upside, another 2%. Have a great rest of your Sunday, everybody, and I'll see you in the live trading room Monday morning. I hope this information helped you, and as well, again, the last thing I wanted to point out was the irony about the market going up is it's coming at the interesting aspect that the volatility index, the cash VIX, just broke another new low for the year. And it's probably, as you can see here, the lowest level that we've been at since, I don't know, March of 22. Whoa, yeah, March of 22. This is kind of an interesting aspect that we are at a new weekly low close level. And that, my friends, generally should see some follow through because people just weren't afraid of the big bad wolf bears. And that's the end of the report. Have a great rest of your weekend.